Hey guys, Akil Stokes here. Welcome back to another Trading Edge video, your weekend look around the markets. In today's video, we're going to take a look at, and we're going to talk about, last week I warned you guys that we had a ton of high impact news events on the horizon. So I did what any seasoned vet experienced trader would do. I got out of town. Literally, I ran as far away possible all the way down to Florida until the dust has settled. And now that it has, I am ready to return. Either that or the fact that Euros are starting and I have a lot of monitors that are specifically used to watch sports. For trading and trading education, business related activities. If you're listening, tax people. Anyway, it's good to be back in the markets. We don't have as much in store this week. You do have a Bank of England interest rate decision coming up on Thursday and a whole bunch of high impact news events on Friday to end the week. A few others sprinkled in there, but definitely nothing compared to the week that was before. Now, let's hop into the markets. Before we do, if you haven't done so already, make sure you subscribe so you don't miss this awesome video each and every week. And if you have any questions or comments or things that you want me to take a look at, I'm going to follow up on a request that a trader did last week in the comment section. Type it in below. I do take a look. I do answer each and every single one unless you get flagged as a robot. So don't feel shy. I'm here to help traders. I'm not just saying it to say it, I guess. So let's get started here. We're going to go to the pound dollar just because I like going in order and I am a creature of habit. And the pound dollar is an interesting situation here because I don't have a bigger picture outlook for this pair, but this is going to be one of those mercenary types of trades where longer term I don't really think long, shorter term I don't really think short, but we're just looking at the technicals and what the chart shows us. It's funny, if you guys listen to the Trading Coach podcast episode I did this past week where I did kind of the quiz that's supposed to tell me my trader DNA, it came out as a day trader, a scalper I think it was, which is the furthest away from what I am, but this would be kind of a day trading type of trade, not necessarily time frame wise, but specifically where you're just looking for a short term in, out, get my money and get to the next situation. So you can see here as we ended the day with a big bearish candle. As we go down to the 4-hour time frame, you're going to see some really cool candlesticks form. Again, we ended here. We have some nice candles with long wicks to the downside, long tail there, a nice pin bar, long tail there, and you can see the RSI. My camera's in the way. Not quite oversold, but getting close to that level. More importantly, we are doing this at a level of structure. So if I draw a horizontal line in not only here at our most recent level of structure, you can see that we did not break and close below that. But even looking left to these kind of lower straggling type of marks, we did not break and close below that as well. Now, we didn't quite reach the lows of this, which would have been ideal, but the markets are going to make things perfect for you. But the fact of the matter is, this type of candlestick formation and general activity in the market show me that the bears have slowed down, that there is buying pressure entering the market, and this is going to be what's called a decision point, where the market's going to make a decision on whether it's going to continue to pump downwards or if we're going to see a move to the upside. And again, we have a Bank of England interest rate decision coming up on Thursday, so it may wait until then. But from a technical perspective, here's how I would look at this. We currently have an inside bar formation that has occurred. Give me a second, I gotta move this camera. It's right in the middle of like my little deal here. I can't see my screen quite. I'm gonna tilt me over a little bit here. Hopefully you don't see underneath the desk because, you know, I like to trade comfortably, but this is a lot better right here. So you can see that we have this pin bar right here, this doji pin bar, and then the next bar completes completely within it, right? This is called an inside bar. We spoke about this a few weeks ago. This means consolidation, and in the markets, consolidation or contraction leads to expansion, right? Just like the universe. So what we're looking for here is, if you're trading a technical inside bar, you're putting your bracketing in order, right? You're putting a buy stop above here, you're putting a sell stop below there, and whichever way the market breaks out, you're getting involved in that direction. I don't necessarily think you need to be that aggressive. You could if you want, to each his own, right? Trading, there's a wide spectrum from super conservative to super aggressive. You can do whatever the hell you want. But Another way would be looking for a break and close, meaning that if price action breaks and closes above this level, that's a good sign for a potential long to buy it up. On the other hand, if price action breaks and closes to the downside, that's a good sign for a bearish continuation and a look for you to sell it down. I would say this to the downside, if you are going to take that route, remember that little area of structure that I said I wish we tested earlier? I would just make sure that we violate that level as well to put yourself in a safer position, because you don't want to sell while you're right at the floor. Next up is going to be dollar Canada, the loonie. We're going to take a little bit more of a fundamental approach on this one, right? Now, when we last spoke, we talked about kind of a handful of banks, central banks cutting interest rates, with dollar Canada being the first to do so. I think that was the beginning of this month, June 5th, somewhere around there. And we thought that there may be a few, but we did think that they may be kind of spaced out. Well, rumor on the street is that Bank of Canada may be considering doing another cut in July, right? So another interest rate cut in July. Remember, basic economics tells us that interest rates going up is strength for currency. Interest rates going down is weakness for currency. So we have Canada on the one hand doing another round of interest rate cuts, potentially weak. The dollar came out this past week with the statement, right? We held our rate steady, but the dollar came out with a statement saying basically we are, again, I still don't think we're going to cut at all in 2024, but now they have said that we're only likely to cut once, and kind of the idea out there is that we're going to cut 3 times. So less likelihood of a cut, which would mean dollar strength, and especially if they do end up not cutting at all, which I think would be a little bit of a deviation from the expectation, not a massive one, but I do think a lot of people think there is going to be a cut. One of the banks that does all the reports think there's going to be 2 cuts, which I don't think is going to happen. They're calling September, December. I'm calling nothing, but that's just me. Who am I, right? No degrees in this type of stuff. But if there are signs of no cuts or less cuts than expected, that's still going to give us more dollar strength. So again, we're banking on a bigger picture, strong dollar, weak Canadian dollar. That's a big buy right here. So I don't really have a technical reason for you to buy here, aside from the fact that if you guys remember, if we go all the way out to the weekly, we're in this kind of consolidation pattern here, right? This is technically a breakout pattern, right? You can look at this as a flag or a big pennant pattern. Not your prettiest one in the world, but the things never are. With a tighter consolidation up here, which would lean more towards a bullish breakout. But there's no reason for entry or anything like we just spoke about on the pound dollar, but just from a bigger term kind of fundamental, longer short-term investor type of perspective, those are some things that you can use to kind of put yourself in the right position in the market. It's funny, I don't know if I'm going to record a podcast on this, but I got a question from one of our traders who started trading when I first started trading. We've spoken for a while. I've taught him for a while. About basically not getting it with trading and wanting to go a longer term route. And I haven't recorded the podcast yet, but if I do, it's going to talk about how you can still use these skills of technical analysis or whatever it may be, the millions of things that we teach you, in a different way. And this is a good example of that. Now we're looking at pound Canada. So remember all the cool stuff I just told you about Canada. Remember I told you about the Bank of England interest rate holding and policy statement, all that stuff coming out this week. Combine them together and you can get your little fundamental mix here on pound Canada and see why this is interesting as well. But we're coming off a bearish week, I guess you can say, with the end of our week, the last couple of days, I should say, storming downwards. And this is going to be your classic pullback trade. Now, again, we're not at a great location on the higher time frame. We're not at a place where it's like we're, like the NASDAQ, for example, where we're just kind of in the middle of no man's land and we're just going to go up and up and up and up and up. But we do have a nice pullback opportunity for those who are interested, because we are coming back to a previous level of structure. For those who are taking the foundation course, right, we know we measure out our ebbs and our flows, our new structure highs, our outside returns, our new structure highs. And what we do is we create a kill zone from our last new structure high or our previous new structure high to our most recent outside return. And this is the area where we expect price to retrace to if we're going to see some type of continuation. We go down to a lower time frame here. We can kind of isolate this zone even more. We have a very nice zone down here. I'll delete the bigger one. And do we have anything else here? That's going to be about it. So if we can give signs of a potential reversal, again, right now we have one clue, the RSI being oversold, but that's not nearly enough. If we can get signs, let's say similar to what we saw with the pound dollar, this could be a nice cheap opportunity to buy it up down here, enter your longs for that next round up. And again, you have a nice safety net of a previous level of structure right there to hide your stops underneath, if not even closer up, depending on the entry signal. So check out Pound Canada for a potential buying opportunity. Now, per your request, I told you guys earlier that you guys should leave comments and ask questions. And one trader did this at Akil. Can you make sure to follow up on gold? We've been looking at gold, I think, 3 times in the last 4 weeks, so you should be very familiar with this. Again, if you're subscribed and you watch every single week, as I know you do. But we had our head and shoulders, and remember that we had kind of a completed head and shoulders depending on how you trade, right? If you are a slanted neckline trader, you have a completed violation of that neckline. If you are a horizontal one, you do not. So again, this is going to depend on what type of trader you are. And if you don't know what type of trader you are none of them. Don't trade this. But if you are someone that looks at this as a slanted neckline, you see the neckline violated here, what you're waiting for is a pullback and some type of opportunity to get short. Remember, we're eyeballing this little area down here. So you can see price action did start to pull back. We're kind of hugging that neckline, previous structure resistance, now turning, or excuse me, support, now turning into resistance. However, if we go a little bit lower, we have something else forming here. And so we're going to combine all the cool technical stuff that we talk about and mix it in one little pot and show you how we can use it all together. I'm hungry, sorry. I'm always hungry when I do these videos. I'm just hungry in general. Anyway, what we have is a potential bearish bat pattern completing, or a bearish bat pattern forming. This first move right here is going to be our X to A leg, this swing high to swing low. This first retracement, if I can pick the right tool, I'll edit that out or just sneakily do it again while I filibuster. This is going to be our X to A. This next move right here, this first retracement, is going to be our A to B. This failed extension would be our B to C. And then a move up to, I'm going to say right here, if I can eyeball it correctly, it needs to be our 886 Fibonacci retracement. Come on, do it right, baby. Get it right. Oh, nailed it. Look at that. Nailed it. Hope I edited that correctly. This is going to be the completion point for our bat pattern at this 886, with the zone being between there and the X leg. So we have a few things here. We have the head and shoulders top, which is a bearish setup. We have a very nice level of structure regardless, right? This is going to be one of our elephant candles regardless of if we're looking at this as a bat or not. And we have a bearish bat pattern pointing south. So how you can combine this in this delicious jar of trading gumbo is in a few different ways, right? One, you can just trade this as a structure trade in its own right. 2, you can trade it as a bat pattern in its own right. 3, you can use it as a combination of both. So let's say you're taking this as a bat. Traditionally, your bat pattern, you would take a target, oops, sorry, elephant. You would take a target 1, probably like right here, a target 2, probably about right there. Well, if you're using this bat pattern as an entry reason into the head and shoulders, or you're combining it as a bat pattern with the higher time frame head and shoulders, what you can do is you can do a few different things, right? Let's say you still want to be conservative and take some money off. You can still take a target 1 off at this level, but instead of taking your target 2, I'm having a horrible job here, target 2 $2 off right there, what you can do is you can hold it for an extended move, for an extended move, the same way as you would play that head and shoulders top. So a few different ways you can do it. Again, you can trade it just as the head and shoulders and just shoot for everything down there, or however you take head and shoulders. You can take it as just the bat or the structure trade, or you can do a little combination of both. So cool deal here on gold. I know you're bored with it. Don't blame me. The trader asked, so he shall receive. Shall have received. He should be given. He has asked, and now he has asked, and now he has been given. Heading over to the DAX now, this is going to be very similar. As you can see, the DAX is in a bullish trend. If you ever attended one of our workshops, which we will have one coming up soon, so make sure you stay in the loop. One of the first things I teach traders is like the dumbed down version of reading a trend. If it goes from a bottom left corner to a top right corner, it is a bullish trend. And you can see this thing has been bullish since the dinosaurs started trading it way back when. Little joke there. That wasn't actually a starting point for dinosaurs. Anyway, the fact is we are in a bullish trend. We have recently put in a new structure high right here. Again, higher high, higher close. And now we are pulling back into that same type of kill zone, or as some call it, a kill zone. And it's going to offer us an opportunity to look for a bullish opportunity for those who are looking to continue long. So here's what we're going to do. We're going to go down to the daily, skip over that. We're going to go to the 4 hour, right? And we have a pretty cool setup happening here. And this is why we want to take a bigger picture look, because the lower the time frame you go, you know, the market works in fractals, which means there are trends within trends within trends within trends. We've been watching this show called Dark Matter where they go in, I don't want to spoil it, different time. Okay, close your ears until I go like that if you don't want to hear the spoiler, right? Ready? 1, 2, 3. They go into this black box, different timelines, different variations, and it's just like they're inside of different universes, blah, 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 blah. Markets are very similar. The lower the time frame you go, right, the bigger picture still exists, but you're only seeing a different part of it, so it changes your opinion. This is why it's so important that you're very consistent in what time frames you watch, right? In your trading plan, there should be specific kind of instructions where you say, hey, I look at this time frame, then that time frame, then that time frame, or I use this time frame for this, that time frame from that. You shouldn't have fair game or free range, because what ends up happening is that you start off on the weekly and then you go to the 5 minute and you're trying to make decisions on the 5 minute based off what you see on the weekly, and the weekly has nothing to do with the 5 minute, right? And you end up in this mindless trap of just kind of seeing things, and we call it analysis paralysis, where you analyze so much that you just get stuck and you don't do anything. So we always want to have that bigger picture to kind of set the framework for what we're looking at, and then we follow up on that. We build on that as we go down to the lower time frames. And what we have here are the lower time frames during this pullback, right, is a potential one-to-one measure move. So if I look at the length of this past move here, draw a little pullback in there. If I copy and paste this and drag it on, you're going to see that we are very close to what's called a one-to-one measured move. I can take a Fibonacci extension from that same AB equals CD move, and you'll see that we're gonna have a 1618 right down at the area. That's called the golden mean. And if I were to take a Fibonacci retracement from this entire last move, it looks like a 618. Please again be right. Yep, right on the 618. Then of course you have structure looking left. So we're coming down, or it's technically in, right? A nice little zone of where this pullback may terminate. I'm going to stretch this all the way down to these lows right here. Now, the level where, you know, the key level that shouldn't be violated is going to be this right here. But that doesn't mean that we can't look for trading opportunities, right? There's certainly an opportunity to trade right here. So again, AB equals CD pattern. We have a 618 and 1618 Fibonacci confluence. We have the RSI massively oversold. Remember, my oversolds are a little bit different than the default. The default is 20 for oversold, mine, or 30. Mine is down at 20, so massively oversold. This is another one where if you're looking for a buying opportunity, whether you're a long-term trader or investor or whatever it may be, this is a nice cheap opportunity to get involved. Speaking of cheap, this video is cheap. In fact, it's free, and I do it each and every week for you. In return, all I ask is that you do a few things for me. 1, subscribe if you're not subscribed already. 2, hit that like button, show me some love. And 3, I want 4 things: comment and or share this on your social media outlets. That's the best way you can support the show. Keep this thing growing. Keep me motivated to come in and do this each and every week. Keep doing that, and I will keep coming back each and every week for you. Until next time, plan your trade, trade your plan. Also, below, who do you have in the Euros? Let me know. England?
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.